Okay, we are starting back our lecture of Chapter 2, Transaction Analysis. We are going to start covering the fourth objective, and basically what we're going to do here is understand the impact of business transactions on accounts. So first, what we need to note is that we have a double entry accounting system. So what that means is that debits equal credits, and each side of the equation has to be in equal. So how we do this is through the T account. So basically, notice that the debits are on the left and the credits are on the right. That doesn't necessarily mean that one account goes up and down. We're going to talk about that. So, and the reason we call it a T account is because it looks just like that. So debits are always on the left and credits are always on the right. Now what we're going to do is make sure that we understand which way it goes up and which way it goes down. So we are back to our accounting equation, assets equals liability plus owner's equity. And you see here assets increase on the debit side but decrease on the credit. And you'll see with liabilities, assets increase on the credit side, and same thing with shareholders' equity. So hence, debits equal credits, assets increase on the debit side, and liabilities plus owner's equity, they increase on the credit side. So once you know which side is an increase, then you understand the next side is a decrease. So please be sure you have this memorized and you understand that, because these are the rules of debits and credits, and this is going to build on our foundation for the remainder of the course. So let's see what increases and decreases. Let's go back to our Freddy's audio service example. And here we have that $50,000 that we went and we got stock. So notice, you remember our journal entry was assets equals liability plus owner's equity. And we had $50,000 in the asset side. And then on the equity side for the common stock, we had $50,000 as well. Now, if we look at it in the T account format, what you will find is here's our cash, and then here is our debit for the $50,000, and here's our common stock, and there is our credit for the $50,000. So what we produced in terms of the accounting equation, so this is our debit, and then this is increasing, right? And so you see cash and common stock going up for both. Now, the second transaction is $40,000 for cash purchase of land, and if you will see that we now have our land transactions here. So if you take note, you see this was our balance right from the previous transaction right here, so that related to our first transaction. And now that we're looking at the second transaction, we have $40,000 increase for land, and here we have a decrease of $40,000. So you note here's the debit side and here's the credit side. With cash, credit goes down. So here why you have it at this point in on the T account. Now, don't forget we were talking about revenues and expenses. So our income statement accounts, we know revenues and expenses, and if we look at it from a T account perspective, we have revenues and expenses. Revenues increase on the credit and expenses increase on the debit. So remember, revenue increases our stockholders' equity, and expenses decreases that stockholders' equity. So if you see, this is our balance sheet right here, right? So we have assets equals liabilities plus owner's equity. And if you'll note, on this end, we have our common stock, our retained earnings, dividends, and revenues and expenses, which is on our income statement account. And notice how all of that relates to our stockholders' equity area. So when we're looking at not only our accounting equation, as you see here, in T account format. Now you get to see the other T account format. So this is our income statement. Revenues increase on the credit, expenses increase on the debit. Dividends is a contra equity account, and that increases on the debit, and retained earnings, similar to revenues, increase on the credit. Please be sure that you have this, again, memorized. It will make your ability to do journal entries a lot easier. So pay attention to this quite a bit and make sure you refer back to it. So now when we're looking at this piece here, we see assets and liabilities, right? So assets increase on the debit and liabilities increase on the credit. Always remember debits equal credits and our T account, so just keep that in mind. Then we are looking now at the common stock piece of the equation. So we're focusing in on this piece, and remember, common stock increases on the credit, so does retained earnings, and so does revenue. And notice this divide right here. Dividends, on the other hand, increases, but that increases on the debit side for both dividends and expenses. So this again, we're going over this a little bit slow so that to ensure that you understand which side it increases on. Make sure that these T accounts are in your Excel workbook, and that will help you in memorizing them. And this concludes this video.